Hey there guys, and welcome back to Alex Invest. Today the markets are a little bit mixed. We had a nice kind of little run in tech and innovation the past few days, and today we're just kind of hovering, some green, some red, and in general the market is of course mixed to even a little bit lower here today. But anyways, today I want to talk to you guys about a few things. First of all, I want to talk to you guys about how Big Tech is reporting earnings this week. Tesla just reported earnings yesterday, so I want to go through that quickly. Then I want to get into the Exro because they have a new partnership with Vicinity. It's a bus company, and they're looking to integrate their coal driver there. So I want to talk to you guys about that. And then finally, I want to talk to you guys about Very Good Food Company because they actually reported financial results, year-end financial results yesterday. And this morning, or at 11, they had a conference call about their financials there. So I want to go through their financials because there's some really good numbers there, and the share price doesn't really match up with that. So I want to go through that as well. But we'll start off here with Tesla. They absolutely smashed earnings, increased revenue by 74% quarter over quarter, 438 million in net income, and yet the share price is down today, which is interesting. And I think, part of the reason is because of just the kind of high multiple that we're trading at in Tesla right now. That being said, this price point here at 713, it is pretty attractive in my opinion, especially considering how well Tesla is still doing here, continually increasing their revenue here. Personally, I think it's really never a bad time to buy Tesla. I do see them kind of continuing much higher. Of course, we could wait to see us come down maybe around to the 670 level, but we're kind of at a pretty good base here at the kind of the 707 level. There's pretty heavy support there, so I don't know if we're gonna dip much below where we are right now. Tesla, like I said, always a good safe play. But the other kind of thing about not only Tesla, but we have Microsoft, Google reporting earnings today, and Apple, Facebook, and Amazon are reporting Wednesday and Thursday here of this week, and so if the results are good, which I think they will in these big tech companies, I think we're going to also see kind of a run in some of the smaller tech and innovation companies that I really like to talk about on this channel as well. So do expect kind of to see, if we see good earnings in some of these bigger tech companies, that we trickle that down into some of these smaller tech companies where we might see a decent run. I've been saying that we will see kind of a run in tech and innovation, and we have over the past few days. Like I said, today we are down a bit, but in general, I do think we're coming back here after, again, we've just been continuously hit down and down. So just watch out for that. Tesla, always a good buy, especially at the price we're at right now. Now I want to get into the Exro partnership here next, which is right here. And now, as we can see here, they've entered into a supply agreement with Vicinity Motor Corp to validate and deploy their a coil driver right into their into Vicinity's electric buses here. So obviously, similar to a lot of their other partnerships here, they still need to develop their coal driver in the buses here. They have to validate it and everything, right? But once they do that, they're looking to bring these into the Vicinity buses and make them, hopefully have a longer battery life, and also increase efficiency in general. Here we can see down here, they're constantly looking for innovative new ways to provide a best-in-class experience for customers, and testing of the coil drive system, which offers a lower energy consumption and higher performance relative to existing systems. And that's kind of what they're heading here towards, which is really good stuff. I think this is going to be a big partnership of theirs, similar to what we see with C Electric in a way, although, both in the kind of transportation sector there, in a way, C Electric more fleet for delivery, etc., rather than transportation, but it's kind of these bigger class of vehicles here, and with the buses obviously even a bigger class here. And so if this works out, this is going to be a great partnership. Again, we're not going to see any of that really commercialization here for a little bit because they still need to validate the Exro coil driver in their buses, but it shouldn't take too long in general. Now, VMC is actually a publicly traded company, VMC.V, and this was the first time I've heard of them, but also a very interesting company. Just to go through them quickly here, this is kind of their buses here, which are electric, right? They've got the 28-foot EV here, and it looks fantastic. They do have some revenues as well already. I think they about 7 million in revenues a quarter here is what sort of I've read. So really moving along, and I think actually that Vicinity could kind of, with Exro as well, they can easily become a leader here if everything works out the way that Exro and Vicinity have planned it to here. Still a lot of testing to be done, but really, really good news, and I'm excited for this this partnership here specifically. And here, this is just quickly what I was saying. Exro will supply the coal driver system technology, and Vicinity will conduct operational validation through deployment of an optimized electric powertrain for VMC's suite of electric buses. So that's kind of what they still need to do here. And then once they do, then they'll integrate it into all their electric buses and then sell those there. So good things. Now, finally, I want to get into the Very Good Food Company and their financials, because these are actually fantastic, and yet for some reason we're still seeing the stock price come down. Now, the two biggest things to mention here is the first one: revenue increased 364% to $4.6 million in fiscal 2020 compared to only $1 million essentially in fiscal 2019. So that is an insane increase there in revenue year over year, and I think it's going to continue because right now they still only have that Victoria facility, and if we go through this, we can see in there that they have increased their capacity in their Victoria facility, but their Vancouver facility is coming up quickly here. And that's kind of the other thing I want to share with you guys here, because if we look right here, we see we are on track to roll out with the rollout of our new production facility in Vancouver, providing us with a substantial growth opportunity to increase production capacity by 2,690% with 37 million pounds of annualized product in 2021. So this is coming up here because I don't know if you guys remember, but from some of the past videos, their Vancouver facility is already set up as a food production facility. So there's not much that they really have to do in terms of getting this moving. The reason they've been waiting a little bit is because of kind of COVID and what's going on right now. But as we can see in 2021, they should have this fully operational, and that'll be a huge increase to production, and that'll also be a huge increase to revenues. Now, I know revenues don't necessarily come from production, but more, demand, right? They're increasing their supply, not necessarily their demand here, but that's not really true, because I think they're kind of lagging behind here on the supply side, on the production side here, because if we take a look at some of their revenues for wholesale, it's really, really low here. And we can even see down here, wholesale revenue was $255,000 in quarter 4 2020, a decrease of 18% in Q3 2020, resulting from higher sales mix weighted towards e-commerce, because they only have a certain amount of product. So they've been weighting that towards their e-commerce, because obviously they're going to make higher margin on that e-commerce sales than they are on the wholesale sales. But once they get this increase in production here, increase in production capacity, they're going to be able to kind of increase their wholesale production wholesale revenue, as well as continue to increase their e-commerce sales there. And then of course they're kind of their butcher shops here as well, but that is kind of the smaller side of the business. It's really this wholesale and e-commerce that are exploding, especially their e-commerce, which in my opinion is absolutely fantastic. E-commerce is the way of the future, and the fact that they're already doing most of their sales in the e-commerce segment is kind of this new they're really going with this new trend here. And I don't see too many other plant-based meats and plant-based food companies actually working very, very largely on this e-commerce segment, on this e-commerce business, because it is such a new growing segment. And I think if they can position themselves in there to kind of have that continuous revenue from online sales, then it's going to be big. That's kind of similar to what I'm doing right now with basically one of the businesses that I'm running, or two actually, really, and that is really, really just heavily investing in that online business model where you're really just making those sales online, because those margins are just fantastic. You don't need really salespeople. You don't need too big of warehouses to store your items, and it's just so easy being able to ship everything out, and it just makes so much more sense, especially in a business like plant-based meats here, in my opinion. So good things here, right? And I think we're going to see kind of big moves in Very Good Foods here soon because of these huge increases. We're going to continue to see these increases happen, and it's just really good news, in my opinion. And the other thing to go along with that, right, is if we take a look at the stock price for Very Good Food Company, we're low right now. I remember back, a few months ago, we were at that $9 range, and I said we'll come down from this $9 because we're so overvalued. Now, I did not expect us to go this low, of course, and now that we're here and we're seeing this amazing news come out from their financials and other things that we've seen in the past here, we've had some pretty big news coming out on Very Good Foods in general here, and yet the price continues downwards. So right now, again, is not a horrible time to get in here. I probably will be picking up some more shares, and maybe not in the immediate future, but somewhere around, I'm looking somewhere around the 4.7-ish, 4.8-ish range here to get into Very Good Food Company. Especially since, we're seeing kind of a decrease in this tech and innovation sector again today. We might kind of see the same thing in Very Good Food Company before we kind of see that run. The opposite could happen, of course, too. People could kind of take in this news, and we could see more of a run in Very Good Food here. But we'll have to see. I'm not quite ready to hop in here for more shares. But if we come down just a little bit, I think I would be willing there, because in the near term here, as well as in the longer term, like we've seen in 2021 here, right, they are kind of looking to really have this Vancouver facility up and running in production and kind of increase their capacity by 2,600%, 2,700% here. And it should be very good news for Very Good Food Company. So that is the last thing I wanted to cover there, and that is going to be it for the video today, guys. I hope you liked it. If you did, please like, subscribe, and leave me a comment as always. And other than that, I hope you guys have a fantastic day, and I will see you guys on Thursday.